So I've realized that if you ask most forex traders, the reason why they are trading a particular forex pair or metal or indices, most of them they don't really know. They just see somebody trading gold and they want to trade gold. For some, they see somebody trading GBP USD and they just love the sound of it, GBP USD, and they want to start trading GBP USD. Some they see somebody trading USD JPY and they feel because they saw loads of wins on the person that traded USD JPY, then USD JPY is the way to go. Some of them they don't even know the minimum balance that is needed to open a lot size of 0.01 on a particular forex pair or a particular metal or index, and that is one major reason why there's every possibility that, especially as a newbie forex trader, even as an intermediate forex trader, you might just keep going in circles because you're actually engaging in a market you know little or nothing about. So in this video, if sincerely from the bottom of your heart you can't really tell the reason why you chose to trade a particular forex pair, metal or indices, or you're just trading it because you saw somebody trading it on YouTube, then you really need to watch this video from beginning to the end, because I'm going to be talking about the reason why you should know all about a particular forex pair or metal or indice you're trading, and the implication it has to your trading psychology and your trading account. If this is your first time of coming through to my channel, my name is Michael and I'm documenting my journey here on YouTube, and I just tell you guys and share with you guys my trading journey as a forex trader. Although I'm yet to get to the level where I aspire to be, but there's been massive improvements in my trading journey so far. If you've been watching my videos from beginning, from last year up till now, you would have noticed the progress and the transparency in what I do on this channel. So let's get straight to the topic of the day. Why do you trade the forex pair you trade? Now guys, I'll be honest with you guys, like as I would always do on the channel. When I started as a forex trader, I started with the idea of the more forex pairs I trade, the more opportunities I see to get into the market and be active and take trades, okay, and be a profitable forex trader. That was the whole idea. But over time, I came to realize that having multiple FX pairs on your chart does not equate you ending being a profitable forex trader, a consistently profitable forex trader. And over time, I realized that with one forex pair alone, you can still be a very good profitable forex trader. As a matter of fact, especially if you're a day trader, it's advised that you don't trade more than two pairs. That's my prescription. That's what I noticed over time. If not for anything, to avoid over trading. And as a forex trader, for you to be a disciplined forex trader, you don't want to be caught over trading. In fact, if you watch my previous video, you would realize that at some point I said one major thing that every profitable forex trader you see out there as a character that they built over time is the art of waiting. That in forex trading, you're expected to wait more than you trade. If you're trading more than you're waiting, then there's every possibility that you're taking the wrong setups. So one major work every forex trader must learn how to do properly is the ability to wait for the right setup. So bottom line is, one way to kill indiscipline is what? Learn to trade less and learn to wait more for your right setups. Learn to wait for the market to come to you, come to your POIs, and you execute your trade. Now, why are you trading that pair you're trading? Now, I'm going to use myself as a case study and as an example for you guys to learn. But before I continue, if you're yet to subscribe to my channel and you enjoy content like this, please do also subscribe to the YouTube channel. Please, I'd love to have you guys be part of what I'm doing on this channel. Like the video, drop your comments if you have one. Now let me continue the discussion. So I'm going to be using myself as a case study. When I started out, I was just doing my thing, watching YouTube videos and all of that. I had my watch list was full with all the forex pairs, gold, all the GBP USD and all whatnot, and I was just trading at random. I was having random results. Of course, that's what you get. So at some point I realized that less is more in trading. So I cut off the number of pairs I trade, and now as you can see, obviously I only trade US 30. I only trade US 30. Now I'm going to explain to you guys why I chose US 30. I'm not doing this video to advertise US 30 to you. You can actually have a particular forex pair you're good at, stick to it, but the whole idea of this video is know the reason why you're trading that pair. Personally, for me, I chose US 30 because one, US 30 is that indice. Please note, US 30 is not a forex pair. US 30 is an indice. Okay, it's not a metal like gold or silver either. Okay, so I chose trading US 30 out of all other out of all other favorite indices that other forex traders trade. I just chose US 30 because one is volatile, and I love the fact that its volatility is not as much as gold and as 100. You get, so I love the fact that I could predict when volatility would come into the market. If you're trading US 30 and you're in West Africa, um volatility comes into the market during New York session. Okay, 2:30 p.m. West African time. That's when you expect your US 30 to be very volatile. So you expect movement at those times. So if you're very good at your technical analysis, you can know when to enter your trades and expect the market to move price into your predicted direction. So it gave me that sense of knowing that at some point I'm expecting the market to move, you know, at a specific direction at a specific given time on a daily basis. Secondly, I realized that I don't need much capital to trade US 30. Now, this is the point that I'm going to base this video on. Haven't you realized that you can have, let's say, $10 in your account, but you cannot even open a contract size trade of 0.01 on, for example, pairs like GBP/USD, for example, pairs like metals like gold. Haven't you noticed it? Even with your $15, for example, you will find it that they will tell you that insufficient balance. Why? Every forex pair you see out there, they have their minimum capital requirements needed for you to open a 0.01 contract size. That's one thing you should understand. You get? Now, especially as a newbie forex trader or you're still battling consistency, you don't want to be trading a pair that once your account balance drops to like $20, $10, $15, you can't take trades anymore. I don't know if I'm talking to somebody. I know most of you guys have encountered this, but you really don't know what happened. Most of you will just result in withdrawing the balance and just be like, man, it's like this thing is not working. No, there's actually a forex pair you can trade your $10 with, and you will still be allowed to open trades even with lot size of 0.01, especially when you're testing the waters. That is what US 30 pairs like US 30 gives you. So when I realized that, because of course I'm in Nigeria, I noticed that even with your 10,000 naira, with your 6,000 naira, as low as 6,000 naira, which is not up to even $10, you can still place trades on US 30 with lot size of 0.01, and your trades will go through. You can't try that on GBP/USD, you can't try that on gold, you can't try that on Euro/USD and all of all these other major pairs you see out there. Are you getting the points now? So you should know the reason why you're trading a particular forex pair. You should know the in and out of that forex pair. Another thing with US 30 is that it's not like other forex pairs that tends to increase their spread size once market gets to Asian session. If you've noticed, for example, if you're trading GBP/USD, once time gets to 11 p.m., 12 p.m. West African time, you will notice that the spread increases drastically. So let's assume that you're already on a trade and your stop loss is very, very tiny, it's not that large. You will notice that once market gets, if you want to swing trade that particular setup till the next day, once market gets to the Asian session, it will knock you out. Spread alone will knock you out. That is when you will notice that price took your SL even when actual price did not touch your SL. What knocked you off the market was spread, not the price of the market itself. Now this is elementary basic knowledge for newbie traders. I know most of you advanced traders on this channel, you already know this, but I'm just doing a crash course for my newbie forex traders watching this video. Are you getting the point? So you don't want to be swing trading. You don't want to hold trades with your little stop loss and with your little account balance when you're trading GBP USD. Because one, on during Asian sessions, spreads tend to widen. Not even Asian sessions alone, there are some kind of news that would want to occur. The spread would open up and it will knock your SL out, except your SL is very, very large. Are you getting it? Now compare this to US 30. US 30 has one of the tightest spread regardless of trading session. Be it London session, New York session, Asian session, the spread level for US 30 remains tight, 100% tight. And now it depends on the broker you're using. Personally, for me, I use Xnest to trade. The link will be in the description of this video. If you're yet to subscribe or register to a broker that gives you fast deposit and withdrawal, please do want to use my link in the description of this video. Register, open an Xnest broker account and reach me. I'll tell you what to do. Xnest gives you this tight spread on US 30. So when you're trading US 30, you can swing trade as you like. Like you can hold a trade, and if you see that the trade is not really moving as you want, you will be at peace holding that trade till the next day. That fear of Asian session spread opening and knocking me out even when price has not gotten there will not be your problem. Are you guys getting the clear picture now? Because I've got loads of messages, people asking me why is it that I would hold the trade over to the next day, and when I wake up I'll see that my SL was taken but price did not get there. That is the point where most of all these newbie traders will say the broker is manipulating you. Oga, the broker is not manipulating you, it's you that does not understand the way these things work. During Asian session or some specific high impact news, spreads tend to widen, and most of these brokers, that is when they do their manipulation. But if you're trading US 30 using Xnest broker that I use, the spread remains tight. One advantage of you trading a pair that has a very tight spread is once you enter a trade, you either go in profit immediately or you just the market, your account balance and your equity reflect exactly what the market is doing per time. You don't want to enter a trade and immediately you enter the trade, you're already at a loss, even when the market is going, when price is going in your favor. Are you getting the point? If you really don't know how this spread thing work, please do want to watch some YouTube videos about how spread affects price in the forex market. Or if you want me to do a video about it, do want to comment in the comment section and I will do a video and educate you guys on how these things work. So what most of you guys call broker manipulation is not really broker manipulation. It's just that you don't understand the way these things work. That is why personally for me I chose US 30 because I can day trade US 30, I can swing trade it without getting scared of spread issues or broker manipulation, because the spread remains tight regardless of what the trading session, regardless of whether there is NFP, FOMC, CPI, I don't care. Whenever all of all those news are happening, the spread for US 30 remains constant. Guys, can you see the advantage of trading US 30? And the fact that US 30 is the only pair I trade has helped in making me to be a disciplined forex trader, because I don't see my setups every day. I don't know if you're getting the point. So it has taught me to wait patiently for the right time to get my setups, get price to tap into my POI, and I take my trades regardless. Once it gets to my POI, I execute. Are you getting it? And I know when to expect volatility in the market. So you should know the reason why you're trading gold. Most of you guys trading gold, trading GBP USD, I'm not discouraging you. I'm not saying those pairs cannot make you a profitable forex trader or fetch you money. But the thing is, know the minimum balance needed to trade that pair. Okay? Before you delve into it. Know how that pair reacts when there is high impact news. Are you guys getting the point I'm trying to make? So all of you saying brokers are manipulating you, your stop loss always gets knocked out even before actual price gets there, it's spread. Now I want you guys to do something. Take your time, open US 30 on your platform. And of course, like as I said, I highly recommend Xnest. Okay, take it a minute, open US 30 pair. You might not trade it, you don't need to trade it. Just observe the spread on US 30 compared to every other pairs you're trading apart from gold. Of course, you know gold has a very tight spread too, but very volatile. Gold is not for newbie traders. I would always say it on this channel. But compare the spread for USD with other FX pairs and tell me what you notice. The next thing you should do is wait for Asian session, open the other pairs you trade, check the spread, compare it to USD and tell me what you notice. The last thing I want you to still compare is whenever you want to place a trade on your preferred trading currency or metal, and broker tells you insufficient fund or capital, go to US30 and see if you can still place a trade using the same 0.01. You would see that it will go through on US30. Are you getting it? So US30 is one index that fits upcoming forex traders, that fits newbie forex traders to build up their confidence, build up their strategy, be a master at it, and grow from there. It is when you've now started making good money, then you can now graduate into trading other higher volatility pairs like gold and GBP/USD and other pairs that would require good capital to at least open even a contract size of 0.01. Are you getting the point now? So I've had so many questions about broker manipulations, and I thought to address this issue in this video. So the reason why you might have entered the trade, swing trade it, and you got knocked out even when actual market price did not get to your SL is simply because of spread and manipulation from your broker. But you hardly get that. In fact, it's almost impossible to have that on US30. That's the reason why I'm doing this video. So bottom line is, guys, know why you're trading the pair you're trading. You see, in this FX space, don't do things because people are doing it. Do things because you know why they are doing it, and you've discovered the reason why they are doing it, and you've seen that it's something you can do comfortably. That's when you do it. Don't just be carried away with videos you see on YouTube, things you see on Twitter or Instagram. Okay, take your time to read. Take your time to understand why the market is moving. Take your time to understand the drivers of the pairs you're trading. Okay, it will help you to really do your technical analysis well and don't get confused when some certain things are happening to the particular forex market you're trading. So I just thought to do this video to educate somebody out there so that they can realize that it's not just enough for you to trade. It's enough more, it's far much more important to know the reason why you're trading that particular currency pair you're trading. My name is Michael once again, and I'm sure this video must have taught you one or two things. And if you sort of like real forex content like this that resonates with what you want to know about the forex market, and you are yet to subscribe to my channel, please do want to subscribe to this YouTube channel. I'll be glad to welcome you to the family. If there's anything you want me to talk about, please guys do want to feel free, drop it on the comment section, and I will do a video specifically for you. I promise you guys, I'll definitely do a video for you. Now, one last update, guys. I was supposed to have started my funded next general competition, February competition. I apologize, guys. A lot of things came up, about my personal life, and I couldn't meet up with documenting it and all of that, and that's the reason why you guys are not seeing the videos. I apologize. I was supposed to do that, so I just want to take my time. I'm actually working out something that will be a whole lot better. Okay, so I just had to dump that competition. Honestly, I just had to dump it for now. Okay, so I'm going to work out something and I'll put you guys on the know. Okay, so that's just the update for now. If you enjoyed this video, do what you like, subscribe if you're yet to subscribe, and share this video. Thank you very much for your time. See you guys in my next video. Bye.